Hey there everybody, Andrew Marlow here. Welcome back to Marlow's Mortgage Minute, bringing you all the tips and tricks in the mortgage world. Today we're going to be talking about something that's kind of a hot button issue these days with what's going on in the economy. Student loans have been in forbearance for a few years now because of COVID, but they recently started back the repayment phase, and a lot of people are wondering, how does this affect me when I'm qualifying for a mortgage? Now, regardless what type of mortgage you're getting, most of the times we have to include the payment for a student loan on student loans. It's a debt. We have to, even if you're not in repayment at that moment, we still have to hit you with a payment when we're doing your debt to income ratio. Now, this video is going to dive into the three major loan types and how student loans are treated by each different agency. Without any further ado, let's dive right in. So the first one that we're going to be talking about is conventional loans. So loans that are going with Fannie and Freddie, conventional, forming, whatever you want to call it. They are treated differently between Fannie or Freddie. So if you're going to be going with Fannie, which most times people don't even know which one they're going with when they're doing conventional, the loan officer decides that whichever fits their situation best. So if you are going with Fannie Mae requires us to use a 1% payment on any unpaid balance. So say your student loans are $100,000. We have to hit you with a $1,000 payment on your student loans. That's a big difference. That can be a big difference when you're trying to qualify. So a lot of times people with high amounts of student loans, Fannie Mae is not always the best solution for them. But if they still want to go conventional and they can qualify for Freddie Mac, you only have to hit them with a 0.5%. So that $1,000 payment would be $500 under Freddie. Now that's where most people that are going conventional, we try to have them go Freddie so that we can hit them with a smaller amount and the DCI is not as high. That's the two conventional agencies. One of the more lenient, well, it kind of goes in line with what Freddie is. FHA loans is kind of the same as Freddie. They hit you with a 0.5% on the unpaid balance. Other part of that is if you have a income-based repayment plan, we can use the amount that's being shown on the income-based repayment plan as long as we have documentation showing that it'll be over 12 months. So FHA, a little bit more lenient than conventional, but not as lenient as VA. So a VA loan treats student loans the best out of the three. The payment that we have to hit is much less than would be for conventional or FHA. So basically how you calculate what your monthly payment would be for your DTI for VA loans is you take the balance of your student loan, you times that by 5%, and then you divide that by 12, and that's the amount that we have to use as your student loan payment. Also with VA, if we can document that it's in forbearance for over 12 months, that at least for the next 12 months it's going to be in forbearance, we can exclude the payment, and there's a couple different caveats to that too. But when you're looking at getting a mortgage, you're looking at getting qualified to buy a home, and you have student loans, it's very important that you know these numbers and you know going in what to expect if you're trying to calculate your DTI on your own. That's it. It was a quick video today. Just wanted to kind of go over the difference in student loans and how they're treated by the agencies. If you have any questions, please reach out to me directly or send me a message on here, leave a comment, anything you want to do. If you found some value in this video, please like, share, subscribe, and send it to all your friends. And I hope you have a wonderful day. Thanks for watching.